Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your financial market wrap-up for this Friday. This is the weekend of Friday, June 9th, 2017, and this is your weekend wrap-up, which means we look at weekly charts, not daily, that we do Monday through Thursday. Now, it's only 3:31, so the markets are still open, but this is about where they're going to settle on the day. And remember, the settlement price is determined at 3:15. The market then closes in Chicago to 3:30, and then it goes from 3:30 to 4 o'clock in the afternoon. But settlements are at that 3:15 time frame. So you're going to have a down day in the NASDAQ and the S&P by a fraction, an up day in the Dow, and we saw a big rotation out of tech stocks today into the banking stocks due to, in part, what? To the people getting ready for the FOMC announcement that comes this coming Wednesday. And when we look at that, we don't see very much of a decline in the bonds and the notes recently. They've actually held on, and that's because the market is pretty convinced that this could be a one-off deal unless the Fed gets a lot better information in the second part of the year. Janet Yellen will most certainly be asked about that. We know that we had what we call Super Thursday yesterday, and what happened there is the ECB stayed very dovish. Yeah, they said, and Mr. Draghi said, no more rate cuts, but he's willing to expand asset purchases. So the rate cuts we knew weren't coming. You know, how much more negative do you have to go? You can accomplish everything you want if you're going to flood the market with more money. So that put pressure, continuing pressure on the euro. By now you've all heard that the gamble that Prime Minister May took when she called a snap election. She didn't have to do that. She had years left under this. She thought she'd get a better majority to negotiate Brexit. She lost on that. So now she's put together what they call a minority government, which means it's her party and one of the other parties out of Northern Ireland to give her enough seats temporarily. Each issue is going to be a big gamble. She has been cut off at the knees, so to speak. So it's a big problem for her, and you'll see there'll be calls for her ouster on the first small problem. Not saying she has to go anywhere, but I'm saying that that's the issue there. Energy markets, well, they're holding on here against the low 45s, and that's interesting. Grain markets, a bit of a mixed picture today. But when we get to the Dow, strong performance, a new all-time high today, and because the market's going to be up just, the market will be up about 60, 70 points, as we just saw, a new all-time high close, up 251 points for the week. Strong performance, still in an up thrust when you look at a weekly area chart of closes. That's all that this is, the weekly chart of closes. When we go to a weekly bar chart, you can see how the pattern's been going, and it just keeps going higher and higher off of this. But the swing line, this one break that we had, you had first a higher high, then a lower low. So while it's come back into a powerhouse move, and it certainly has, and with the thrust there, it's not giving you what we'll call a clean trend off the swing line. You don't have the pattern of higher highs and higher lows. What has been happening over and over and over for you longer-term traders is the market falls to the 18-week average. It looks like it's going to fall out of bed. It doesn't. And from there, it is recovered each time, and now it's ending up at new higher highs. Restraints are coming in from the upper Bollinger Band at 21,318. That is the problem number for the market. Momentum is still pointing up. So what we have is a market with strong momentum up to the upper Bollinger Band area. We'll see if it hits it come Monday or not, and momentum still to the upside. In the NASDAQ, a huge reversal. Now, I don't buy into these reversals. If we come back to this day, same thing. A big reversal off a contract high, nothing really happened. I can go back on the chart and show you these over and over. So yes, maybe it sets up a trade top, and certainly if you lose on the weekly chart, the momentum as you're losing now and it doesn't turn itself back up, there'll be calls that that was maybe a summertime high for the market. Don't know. If it is, the market may be at the 5,500 level, about 200 points from here. Away you go, and that'll be support. You'll say, that's far away. It really isn't. Take a look at what you're down right now. You're down 145.50 at this point on the week, so it's not as much as you think. On the E-mini S&P on the weekly chart, we came up, we hit the Bollinger Band, we stalled. Momentum is still looking to me bullish in the marketplace. The trend in this market is up. You have the higher lows and the higher highs. You certainly, the way I teach charting, you never buy into a Bollinger Band. This is where I think the pros take money off the table, and then they come in on the brakes again if the trend is staying up. And in the Russell, you've re-entered uptrend territory. Higher lows, higher highs. But if you look at the Bollinger Band top, you're at 1423. You're trading right over it, which is 1420.90. I'm going to say it again. This is where I think the pros take some money off the top to make the market prove it can break out. It tried this up here and didn't get anywhere. So we'll see just what happens as the market fights this bit of a battle with it. And, of course, the FOMCs this week, we have to see where we go. Now, a big reversal day in the VIX. It got through today, and this is daily chart, not weekly. It got through the 18-day and the 100 and then slammed right back down. This market made a new low for this move as well. It got down to 937 under the 958 level, but when you turn the stochastic and it's no longer embedded, the objective becomes the 18-day average. It all happened today. So I think what this market's done is it's getting itself into position in terms of volatility for the Fed, and it's come out of a downtrend, but it's not in an uptrend. Hard to figure out what to do with it. In the 10-year notes, at any point you can get further breaking in this market. This is the weekly chart on it. You've again hit the upper Bollinger Band. You've been riding this band, by the way, for quite a while. Now understand, the Fed is sitting here, and at one point we were at 2.6 rather, just a couple of months ago on interest rates. We're back down to 2.1922 on interest rates going into the Fed meeting, and the market knows the Fed's going to raise the interest rate. Now, how do I say knows? If you go to the CME Group Fed Watch page, take a look at the probability. It's over the top. So that probability sets it. I don't think anything's happened in the world to offset what the Fed might do. Maybe the British election might have been one of those events, or the Comey talks yesterday, one of those events. You can't argue that that's the case. The British stock market was up today. While the pound is down, it's not a disaster. It's only 2 cents, and there's just not that talk there. So this market still in an uptrend. Dollar index, yeah, it's bouncing, but it's still in a downtrend. It's had now several weeks in a row, 4 of them, where it's underneath the 100-week average. You might get a bounce back to it or over it. 97.70 would be that number. That would negate on the longer-term chart this downtrend we've had. If you fail here and can't get up and through that, watch out. This market can then offer even further declines on it. In the euro currency, I'll be watching to see if you take out this low right through here. And last week's low, to be specific, was 111.20. So barring that, unless the market gets under that, watch out. And this week we're closing out at 112.01.5. So you have about 80 more points to drop to take that out and say, okay, time to correct. And notice, this is 4 weeks in a row over the 100-week average. So interesting plays. We don't have the flip-flop yet where you've gotten the 18-week average over the 100. Let's go back to the dollar. You've been, though, in a bearish configuration, or have you? No. In a real bearish configuration, the 18-week is underneath the 100. So they're flip-flops of each other that need to do a bit more work for longer-term trending. Let me get back to where we were at. British pound. Lower highs, lower lows, down into what number? Take a look at today's low, 126.38. What's the 18-week low? 126.33. Last night, if you get my report, I gave you 2 numbers that were right in that zone because I was looking at the longer-term moving averages on the daily charts, and they went right to it and stopped. So it's very interesting. And on the weekly, you're about there. Momentum has turned down in the pound. So what we have is the swing line down, but price is over the 18-week moving average. It closes. The 2 negate each other, so you have nothing in there. You've got momentum still pointing to the downside. The Canadian, very important. It's up to a nice area. Now, their employment blew through. They were looking for 15,000 jobs added. They got 54,000. That really kicked the market up today. And here's the interesting thing. This market has been able to stay up in the face of weak oil. Now, let me tell you what will hurt this market. If you get back under the 73.80 zone, which is only 50 points away on the weekly chart, you will again turn the trend away from the 18-week average, under that low, and put into place 72.58. If you can get over 74.72 and close over that, well, you still have the 100-day average resistance at 75.35, and then maybe you can make a run higher. Right now, the trend is down, the bias is down, but momentum has been pointing up. So, got different fights going on. In the Japanese yen, the market saw a week of some profit taking finally in front of Super Thursday yesterday. On the weekly chart, you still haven't done any long-term damage. You have not gotten back under the 18 or the 100-week moving average of closes. The swing line is still pointing up, and momentum is still pointing up. So even though you're getting a correction, this market, it's sort of pulled back on the daily charts, but the weekly charts are still looking good. In the crude oil market, you're down to very important support. Now, I was on Fox Business this week talking about the energy markets, and I pointed this number out, and I even sent charts and so on to them, and I said, listen, you're down to key areas. The market's caught in the Bollinger Bands. You got to prove it can break out of this before you start throwing in the towel, because everybody on the station's bearish, bearish, bearish. And I'm not arguing. I'm just saying, this chart is saying this is where you cover shorts, not where you start adding shorts, and there's a very big difference. Resistance back up at 50.14. Natural gas, the market's trendless right here. You've got a higher high and lower low. That's not a trend. The bias is down because you're under the 18-week average of closes. However, momentum is still pointing down on the chart. You got this market fighting all over the place, not accomplishing an awful lot one way or the other. And that brings me to teaching you what I've got here. You know, every now and then I do two things. I raise the price of my charting course, and then sometimes I offer discounts. Sometimes you don't get them for a year at a shot, 6 months at a shot. It's summer. I want to teach you. Now, let me explain how I do it. I created an online charting course so I could do away with shipping, handling, and all that nonsense, because you buy something, I hate it. I just bought some bullets for, not bullets, for some screws for a gun that I have. All right? And in that gun, 4 little screws, each one $1.60. I paid $8 in shipping. Livid. Absolutely livid. So that's part of why I did this all online. It's 4 hours of videos, 54 videos, about 4 hours long, actually a little longer than that. You see what I do, you do the same thing. I teach 5 indicators in a very certain way. You don't see them all in the videos that I'm doing here, by my design. They're only in the course. So you're going to learn about swing lines in a whole different way than I even show it here, but you're going to really learn it and how to do it yourself. I'm going to show you moving averages with much more than you're seeing here, not just the 18 and the 100. You watch. Slow stochastics. I'm going to show you tricks and tools that I use. Bollinger Bands all the way through. And then there's a profit-taking tool I never talk about in these videos, but I'm all over them in my course. It's called window envelopes, and they are another level of profit-taking. You put it all together, you see what I do in the past, you do the same. And folks, it's not just for commodities. Trade stocks, ETFs, it's it. In fact, in the course, I pride myself, I cover in a lot of the different charts that you're going to see, you don't know what the market is by my design. I erase it before I record it so that you're looking at a pattern, you're not looking at a chart per se that you know what it is. Very important, and they're real markets. I want to tell you that. So it starts off with a PDF, then I walk you into actual charts. I teach you every step along the way, and then to reinforce it, my research. My research runs, if you're not a trading account of mine, $60 every 30 days. I throw that in, assuming you haven't had my research as a paid subscriber. Number 2, what about the charting software? It's a $99 value. Between the two, you got about $159. The course with the videos is $99.95, but if you use the code IRA20, just write that down, IRA20. There's a discount coupon area, put it in. $20 off the course, $79.95. How much simpler can it be? Take advantage of it. It won't last. And here's my one promise, the one thing I can tell you. I'm going to be raising the price, the retail price of the course again, and you won't get this type of discount on it. That simple. Call my staff if you want to buy it. They'll handle it for you. You can go to our website under the word education. If you click up here, you'll see this icon. It'll take you right to the form. It'll answer all the questions you might have, and away you go. I'm Ira Epstein. Thank you so much for watching, and I'll see everybody come Monday. Have a great weekend. It's going to be